This is David Patrick, Fitzstock Charts, weekend market analysis. Charts Way Sleep, week 24 for June 15, 2019. We are in an 8-day uptrend. This is our fourth uptrend this year after having 11 uptrends last year, which was a monster year for us. We're going to continue to look at 2012 historical chart pattern comparison. Don't fall in love with an analog, okay? All analog, all comparisons eventually diverge. We'll see how long this one lasts. The most important thing is use your rules of engagement and trade the uptrends. Weekly confirmation we don't have yet. That's why I'm not all in. I'm waiting for the weekly uptrend, the weekly confirmation. Then I'll raise the stakes. Right now, if we close, I'm doing this video Friday around 10:30. Depending on where we close, we could still be in a downtrend on the weekly. Most likely, we're going to be in a weekly no trend. All right. Our numbers year to date, 225 different stocks / options have engaged from our focus list, from our suggested entries. One of them we haven't been able to scale yet. We don't know if it'll be a winner or loser. We have 20 losers, 204 winners, 90%, over 90% win rate, which is absolutely crazy performance. Our 90% club, 1,063 options that are up over 90% since we launched the service back in 2013. We have 296 of those are triplers. Year to date, 120 doublers, 31 triplers. And our numbers are phenomenal. We make our money in uptrend. A couple things I want to start doing with every video is looking at the higher time frame and looking at the lower time frame. Time frames are everything with our methodology, and we'll get into that in a moment. So currently, this is the weekly, and I have a bar chart up because to me, it's easier to see if we're going to close above. So first of all, let's blow this up a little bit so we can see what's going on here. You can't really see, but we're going to need to close above 2877. A close above 2877 will get us into no trend from a downtrend. You know, some people are wondering why at not 130, 140, 120 long market exposure like I was with most of the other uptrends. It's because our weekly has not confirmed. Until the weekly confirms, most likely I'm going to stay below 60% long market exposure, or 65. I'm not going to get up to 90, 100, 110 unless I have all the stars aligned. Okay, so our historical chart pattern comparisons back here to 2012. It's not a great comparison, but there's similarities. You saw the MACD bear cross weekly, and it started curling back up. You can see it took many, many, many weeks for that to MACD bull cross. In fact, if we blow up that time frame on a weekly, you can see when we went into no trend, we had 1, 2, 3, 4, 5. On the 5th week, after we got put into no trend, the 5th week was when you saw price strength confirmation and when you saw MACD bull cross. And that's when you load up. And back in 2016, yeah, right here, is you got your bull flag, your MACD bull cross. That's where I loaded up. And obviously I loaded up right in here this year. So right now I'm trading light. I do not have a ton of long market exposure, and I'm risking small amounts of the profits that we have year to date because we should be high stacked with profits. Let's flip to our lower time frame, and like always, I like to bring up certain questions, and I don't have all the answers. I don't have a magic button for everyone. I have a methodology, and I have, answers for the methodology that I trade. But, we use simple trend lines. The more bars you draw these trend lines with, the better. This is a 5-minute, we call it 5-minute ROE, 5-minute rules of engagement on a 5-minute time frame, where our 10 SMA is this green line. So price above gives us permission to be long. Price below gives us permission to be short. Obviously, the more rules of engagement you have in your favor, meaning, okay, is the higher time frame agreeing with the lower time frame? Is this a bullish price pattern, a bull flag, or is this a a counter trend trade or is it with the trend? You have to decide how many rules of engagement you have. And you can go to the website to see. Our basic rules of engagement is just price above the 10 SMA. Obviously, if we go into an uptrend or downtrend, that's confirmation. If we see MACD, bull cross, or bear cross, that's more confirmation. If the higher time frame agrees, that's more confirmation. If we have a lot of technical data that's in our favor, that's more confirmation. So you have to trade what you see. So this was a break of a downtrend line. So this candle, you could get long, okay? That candle you can get long. You want at least 10 bars when you draw these trend lines. So let's see if I can draw. It's difficult here. So you could say, all right, well, what about right here? Could I have went short? Well, you have rules to engage to go short there. It's below the 10 SMA. The problem with this is you have MACD that's bullish. In fact, it's breaking multi-hour highs right here. That's not a great trade because you don't have all the stars aligned. You only have price below, right? The more ROE we have in our favor, the higher odds it's going to be. What about right here? Same thing, right? You got real sloppy with price. MACD's curling. It's still at multi-hour highs, right? That's a tough trade to take. Now, when we draw a trend line that's got more bars in this, now you have your MACD bear cross, right? After price confirmed highs at multi-hour highs. So right in here, yeah, I would say right in here you can go short. When you're breaking, let's call it a 10, 12 bar low, and you see this MACD bear cross. That's a better trade setup. And someone asked me, can you get long here? Well, I posted, well, I'm not getting long there. First of all, the most opportune time to trade is probably from 5 a.m. till 11 a.m. Most people aren't up at 5 a.m., so maybe let's call it 8 a.m. to 11 a.m. Right in here was around 10:30, so you get a half an hour of good trading left. It's tight. I said, yes, you have your rules to engage here. Is this a great trade setup? Well, you just had MACD hit 4-hour low, let's call it, and it hasn't even crossed yet. It's a tough trade. Do you have rules to engage to get long there? Yes, you do. Is it a lower odds trade? It might be because you don't have your MACD bull cross. I don't know. And some people are now looking at higher time frames. So if they're trading 5-minute, maybe they're using a 15-minute as their higher time frame, a 30-minute as their higher time frame, a 60-minute as their higher time frame. That's phenomenal. I love to hear that people are doing things on their own, but using the methodology. I talked about last video how someone has come up with an algo or a way to develop buy and sell signals using the 5-minute rules of engagement. That's amazing. The fact that people are starting to look at higher time frame with the 5-minute charts, that's amazing stuff because that's what you do as trader, right? You use your rules, your trading methodology, and if we're trading daily for swing and we're looking at weekly, by all means, if you're trading 5-minute, you can look at a higher time frame, whether it's a 15, a 30, or a 60 is your higher time frame. So, and maybe we'll start looking at that in these videos too. But anyway, I just wanted to dissect a few trades and why some work better than others. And once again, I want to emphasize, you don't have to short stocks. That is not the focus of the service is day trading. It is just supplemental to our ESFL, which is our focus list, which is where we make our big money, being swing long in uptrends. And the 90% club is proof in the pudding, and the 90% win rate is proof in the pudding. Okay, so I am bullish, whether I'm wrong or right. You got to remember, I'm always bullish in uptrends, bearish in downtrends. I don't know where we're going in the short term. Price is not telling us too much here, right? We're in a trading range for the last 1, 2, 3, 4, 5, 6 days. Trading range. We're in an uptrend, but it's a trading range right here these last 5 days. This is a tough scenario, right? You want to see a breakout. At the same token, maybe we touch the 10 SMA. I don't know which one's going to come first. All I know is it's constructive right now on the ES. This is a bull flag. It's elongating, and we're staying above the 50 SMA for right now. That's bullish. That can change on Monday. It could change anytime. It could change by the close today. But right now, that price structure is bullish, and that's why I added the other day to my SPXL. So I'm 20% SPXL, which gives me 60% long market exposure, while still remaining 75% cash, because I also am long shop, which is a massive winner. So with that said, I always say everyone is unique with their risk profile, with their trading time horizon. You have to identify yours. Whether you're going to day trade, whether you're going to take shorts, whether you're just going to take swing longs and uptrends from the ESFL. You know your highest odds is just trading the uptrends on the ESFL. If you're a risk taker and you're aggressive, by all means, you can take other trades. I do tell you all the time, in no trends and in downtrends is where most average traders lose their money, lose their year-to-date profits. Don't be average. We're currently in an uptrend, but we're also currently not doing anything. I mean, we're 5 days of doing really nothing. So we need price trend confirmation, or we need to touch the 10 SMA, and right now we're not seeing either. Let's flip to the Nasdaq, because I think this is pretty important. This is a big reason why the market's stalling, is the Nasdaq cannot get over this 50 SMA and close above it. Well, it's real simple. We're either going to melt back down and fill these gaps, or we're going to start getting above the 50 SMA, or we're going to trade sideways for a while. I don't know which of the three is going to happen. I'm staying long the SPX because it's above the 50 SMA. It's a little bit stronger until it stops me out. If the market improves, and by the way, if we flip to a 20-year chart and we look at the Nasdaq back in 2012, because we've been only looking at the S&P, let's just see what it did. I think it was December-ish 2012. And you can see it came up here, paused at the 50 SMA, very similar, by the way. And what did it do? Well, it really didn't do too much for a while. In fact, if we draw this, if I can draw it, you stayed in this trading range, tried to get above, tried to get below, whatever, and really didn't do too much for a while. This actually makes the most sense as we approach earnings season. Digestion of price, and then if earnings season has any bit of hope in it, maybe we do this and see some kind of follow through. We're not going to fall in love with this thesis, but I would anticipate this type of price action. So if we're right here, we could have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15 that puts us into July. We could have some sort of sideways action on the Nasdaq until we get into earnings season. And when we flip to the SPX, let's just see how the SPX handled that time frame on the daily. Let's see here. Let me flip this. Wish there was a faster way to do this. Let's see, December. Yeah, right in December 6th. Right in here is where the Nasdaq was starting to build that sideways action. And you can see from December, let's call it 6th to the 10th, even back in that time frame, in 2012, the S&P was stronger. You can see it tried to make a nice move up, pulled back, and then broke out. So we'll see if A, the S&P is going to continue to diverge and be stronger, and B, if we see some sort of bullish price action as we get into earnings season. Between now and earnings season, I think it could be challenging, meaning I don't think there's going to be, and once again, this is just my opinion based on technicals, I don't think there's going to be a ton of momentum until we get some kind of catalyst, which would be earnings season. So keep an open mind, use your stops, stay long. We're in uptrends. I wouldn't be ultra long. I wouldn't be leveraged long until we see weekly confirmation and or, maybe up here. If we do get to new highs, let's call it in July, to me, that's extremely bullish because now you have a cup and you have a handle pattern developing, which would be extremely bullish for the next 12 to 18 months, according to technicals. We're not going to fall in love with that thesis, but we're going to see if we see some sideways jolting, up and down, maybe a thrust higher as we get into earnings season. And if we see that scenario, that will be one of those scenarios, again, where all the stars are aligned, where I become leverage long again. Okay, now that we are 15 minutes deep in this video, let's start talking about other things. XLE continues to underperform, not too much. I would like to see the financials come to life. They're really, I drew this megaphone wedge. There's the upper, there's the lower. We haven't done anything. Financials are improving, but they're really not giving us a whole lot of hints of what's going on. The Russell 2000, let's see, right here. Whoops, why did that happen? Let me change this. Let me see if I had it rut. Why is this? It's extremely weird. Once I pulled up the rut, it came up fine. Okay, so the Russell 2000, and this is another very interesting chart because, speaking of sideways action, so this has been in this sideways action, broke to the downside, came right back above for, I don't know, since February. So we're going to need some sort of leadership. If we would break out in July in earnings, it's either going to be Nasdaq, going to be S&P, could be the Russell, could be banks, could be, I doubt it, but could be oil. I doubt it. It could be biotechs, but I doubt that also. I'd like to see banks and or transports and or technology lead if we would break out in July. And once again, we're not going to predict. We're going to react to see if that happens. Okay, so gold, we talked about how bullish gold was, break of a downtrend, bull flag, price strength confirmation. The chart on gold looks absolutely phenomenal. And maybe we'll look to get long some gold this week or some gold stocks that might be on the ESFL. Still bullish TLT and bonds. We talked about probably fills these gaps, maybe consolidates more before much higher. Bonds to me remain very bullish. Apple, we talked about it coming up and filling some gaps, which it did. Now it's digesting price. To me, this is not really telling us a whole lot. We got gap magnets to the north and south side. And right now, I would like to see this stock just trade sideways. I don't think we have a trading edge on it right here. Amazon, bull flag above a 50 SMA, very slow. Netflix, right in the middle of, actually at the bottom of the wedge, not giving us any sort of hope for a new trade. Expedia actually looks very bullish. Booking hasn't shown us a lot, but we have a downtrend. Let me see if I can draw that. Why is that not working? Let's see here. Here's the top. So I think that we are wedging here, and I think we're heading to the top of this wedge. And most likely what's going to happen with this one is it's going to bull flag above, maybe come back in, and then go higher. This is a nice pattern that's developing on Expedia. That's worth mentioning. It's worth keeping on your radar for swings. Someone had mentioned Facebook breaking out. Well, obviously Facebook's not breaking out. These are when we take Facebook long, and we talked about, do you have rules to engage right here at 177? It's 181. It's gone up $4 since your rules of engagement. Still has rules of engagement and still in an uptrend. Is it breaking out? No. Is it paying with rules of engagement? Absolutely. Can it go all the way up here? Absolutely. So Facebook is setting up. The problem with adding is it's right at the 50 SMA resistance. So it could be on the ESFL. Still looks pretty good and still has rules to engage long. Google, yeah, I mean, you broke a downtrend line. This is my least favorite long trade because you got these gaps. You're below the 200 SMA. I don't think it's a great setup. I would sit out that one. NVIDIA broke the downtrend, bull flagged above, started to come back in, and now it's just drifting. And it really needs to hold those lows because this price pattern is, if you get down there, that's a triple bottom or near triple bottom. You just don't want to break those lows. So I think if you look at the semiconductors, they're getting extremely sloppy. And as long as they hold these lows, I think it would be healthy for it to consolidate, like we were talking about with the Nasdaq, into July. In that price range, if it consolidates, then I think these semis like NVIDIA or Intel can start to heal. It's a healing process. Texas Instruments broke that 10 SMA also. So let's see if any of them look good. AMD's even breaking down. OLED was on our radar. It needs price strength confirmation, but actually looks pretty good. And Xilinx looks like it wants to retouch that 200 SMA. So the semis are very heavy and worth noting. Microsoft, to me, although it hasn't really paid too much since our last entry, that is a very bullish price action or price pattern on Microsoft. Adobe, not doing too much. We don't have a lot of leaders that are leading. CRM, Workday, Jobs, and that's probably why the market's really not doing too much. Normally when the Nasdaq wants to giddy up, let's see if Viva is playing ball still. New highs with MACD. Viva is one of the top 5 stocks to be in right now. Team, FFIV, Twitter, Snap paid a little bit the other day. Let's look at Roku. When we talked about Roku's price objective was 100, and now this thing can easily go to 130. It might rest if the Nasdaq does, but Roku, phenomenal looking chart. Baba and Baidu, they're just drifting. I don't see much attention that for a new trade setup. Cyber, not doing too much. BMW, eBay actually looks pretty good here. I mean, this might be on the ESFL for next week. It's a breakout. If it sees price strength confirmation, it's a pretty bullish looking chart on eBay. Panwa, yeah, it doesn't excite me. Momo, Shop, and this one is paid huge, just like Xilinx and Apple. This is a nice price strength all along. 52-week highs continues to grind higher. Box not showing us too much. What about Dropbox? Yeah, it's on the ESFL, but it needs price strength confirmation. There's just not a lot of momentum. Let's look at Tilray, Kronos. Nope, they didn't. I don't believe they engaged. Probably going to take it off because it didn't engage. What about the casinos? Win, MGM. No, actually, MGM looks the best out of all of them. It's a bull flag above here. Problem is, that's a gap fill. What happens after gap fill? You start grinding and just slowing down. Excuse me. Let's look at the banks. Morgan Stanley, JP Morgan, Goldman Sachs, Bank of America, excuse me, Citigroup, USB, nothing. Visa, MasterCard even slowing down, and those ones were doing very well. I actually, and I've been bullish this one since we got back above here, and we talked about this bullish price action. I actually think this is going to reset up long again, even though it got knocked out of trend. I think this one rests for a little bit, and then it's going to reset up. And I think this one, once again, I think this one going to 230. And if I'm wrong, I'm wrong. That's what price to me dictates. This is exactly what you want to see. A breakout, get knocked out of trend, shake people out, rest a little bit, and start grinding back up. And I think that's what CME will do. ICE, CBOE, yeah, they're slowing down, and they were big leaders before. Let's see. Is there anything going on in oil, COP? PSX, no, these have just been asleep for a while, and I don't see anything. Rig and Diamond Offshore just look absolutely horrible. Very, very, very crazy looking charts there. How bearish they look, and on some of the drillers, as bearish as they look, and actually the XLE is holding up. If you look at the OIH, yeah, that looks ugly. That's a 52-week low on OIH. So it's worth noting how weak that sector is. Is it going to, completely just diverge from the market, or is it going to bring the market down? And time will tell. Let's look at a few of these biotechs. REGN looks like it could short squeeze. Alexion, not doing too much. Jazz, ISRG, aluminum. Aluminum looks probably the best of all. And I do think aluminum does go to new highs. X-ray engaged a while back, continues to grind to new highs. So aluminum and X-ray look the best. I don't see too much in that sector. CMG looks fine. It broke out new highs without MACD. I understand it's bearish divergence. It needs to rest. It's probably going to regather itself after its rest. That was a tough new ad because the market's slowing down too. Twillo, UBNT, not doing too much. Docu. Yeah, there's really nothing going on there. Let's talk about Lyft, Uber, then the SPX. So I think once this thing does get back above 63 and a quarter, let's call it, I think this thing's going. And I think it's going to 75 fast if we can get up there. Uber, we talked about this. I thought it would come right back here to this 45 area. It did. If it does and rests, it's actually bullish. and it's setting up for higher prices. I still think both these ones are going much higher, but right now they're in rest mode. And when they're in rest mode, they're going to be hard to trade because you're not getting paid right away, and everyone likes to get paid right away. Okay, so we're about 25 minutes in this video. We've come off the lows on the SPX and the ES. We're holding this bull flag, and my expectations are very minimal. I have 65% long market exposure with SHOP and SPXL, and I'm looking to add if we get above there, and I'm looking to become leverage long if we break out, because that would be a cup and handle pattern. In the higher time frame, most likely would agree with that and show us confirmation with MACD bull cross and into an uptrend. Until that happens, I'm sitting back. We've had 4 uptrends this year. We are fat stacked with profits after 11 uptrends last year. There's no reason to be over aggressive or over trade here. We're going into earnings season, and the Nasdaq right now is underperforming. We have to see if the Nasdaq's going to wake up and how long it's going to take for it to wake up. My personal opinion is we could grind sideways. We could start seeing some leadership outside tech, and tech wake up as we get closer and closer to earnings season. That's all I have for you. Charts while you sleep, week 24. See you on Monday.